水啦。Welcome to ANC Group of Tax Consultants. Let's talk about taxes and businesses from scratch. This is Chapter 1, Type of Incorporations. Now imagine yourself in the shoes of a new entrepreneur. You're excited, you're naive, you want to go out to do some business, make some money. You started a business online using your own personal name. Yeah, you could probably make some bucket of money without submitting taxes, of course. Then you realize at one point of time, right, it is time for me to make it into a serious business. Now, why would you have these kind of thoughts? There could be plenty of reasons. Number one, you need funds. But who the hell wants to invest in you? Not even your mom. So you have to make sure you have a proper company or accounts. Proper company gives you investors, bankers, or shareholders confident to invest in you and your company. Number two, I want to buy inventories on credit. Now, again, who the hell wants to sell you inventories if you buy it under your own personal name? Now, what happens if you go missing? What happens if you go bankrupt? So surely no one wants to give you any form of credit term. Number three, let's say you are lucky enough to get these inventories, but because you have never intended to submit your taxes, you have no proper entity, you are unable to furnish any sales document or invoice, customers then lose their confidence. Come on, step in their shoes. They need the invoice so that they can do their accounting and reduce their taxes, correct? Now, if there's no invoice, what happens if the government suspect them on smuggling goods? So yeah, you decided it's time to get serious. You go to this place called the Companies Commission of Malaysia or Suruhanjaya Syarikat Malaysia and you speak to the officer. But the more you speak to them, the more confused you get because there are generally 4 different types of business incorporation in Malaysia. And there's actually in fact more. But let's keep it simple for now. Type A, enterprise or sole proprietor. Now this is the easiest to incorporate. You just need one person, which is yourself. The pro, easy to start, very simple and very cheap. 30 ringgit or 60 ringgit. The con, high risk, very high risk. Type B is partnership, another easiest to incorporate, but you need at least 2 people. You and your wife, or you and your husband, or you and your friends. You can of course go more than 2 or up to 20 people, but come on, trust me, the more people you have, the harder to manage. The pro, again, easy to start, simple and cheap. The con, high risk, very super high risk. Now let's talk cheap. It is cheap because starting this business and maintaining this business is easy. You just need to get someone to do up your accounts yearly and submit your taxes. No secretary or auditor required. Unfortunately, these 2 types of business incorporations have something in common. One, they are not separate legal entity. That means if anything happened to these businesses, your personal assets or wealth will be affected as well, exposing you to unnecessary extreme high risk. Number 2, in addition to that, the tax audit risk is very high, meaning you are exposed to high tax audit risk with a very simple reason. No one or no auditor have checked your accounts. Number 3, on top of that, the tax rate follow individual tax rate. Therefore, the highest bracket may hit 30%, but for standard SME, probably it will hovering at an effective tax rate of about 25%. That's where you may want to consider, is there any better or safer way out? And that's where we talk about Type C, Sdn Bhd, or the private limited company. The pro, good and secure in every way. The con, higher cost. Sdn Bhd is the best option, the best choice for every businesses. Yes, it may be the most costly to start off with because you have to engage a company secretary to set up the company for you, and every year you have to engage an auditor to check your accounts. They tend to ask you a lot of questions. I mean, a lot. But it's because of these factors. Number 1, your accounts are clean. Banks are confident. Shareholders and investors are confident. Number 2, you can even give or sell the shares to investors whom believe in your potential, or even employees that you trust whom can go along with the company and grow. Number 3, you can use company to get loans, buy properties, or even go for long-term succession planning. Number 4, Suppliers are happy to offer long credit term, but sometimes also depends on who are the owners and what is the share capital amount. Number 5, shareholders can be individual or even corporate shareholders. Planning for IPO? That's your only option. Number 6, the best part is it is separate legal entity, meaning your own personal assets are protected except for government matters. Number 7, tax rate is 17% on the first 600,000 chargeable income, subsequent 24%, but still way cheaper than individual in the long run. Number 8, you can plan your taxes legally among the company and the directors. Kill 2 birds with 1 stone. And lastly, you can even start the company with 1 single person. Whether this is feasible or not, easy. Ask yourself, do you need finances? Do you need loans? Do you need investors? And most importantly, what is the amount of taxes that you are paying now? What are the potential tax savings? And most importantly, whether such savings and benefits outweigh your compliance costs. But yeah, there could be another final option, right? So the final option is Type D, Limited Liability Partnership. Let's put it short, LLP. The pro, cheaper than Sdn Bhd, slightly more expensive than sole proprietor and partnership, and secure. The con, hard to get finances and more suitable for service industries. LLP is, I would say, best of both worlds, partnership and Sdn Bhd. But similar to a partnership, you need at least 2 persons to start a business. It is cheap because you do not need company secretary and auditor, but you still enjoy taxes similar to Sdn Bhd with only 17% for the first 600,000 chargeable income. And the best part is, it is separate legal entity. Your personal assets are protected if the company goes down. Now it seems LLP is the best of everything, right? Should I go for LLP? Now there are a few catches. LLP may seem too good to be true, but remember, due to lack of audited financial statements and its structure of generally owned by individual, bankers, shareholders, suppliers, or even investors still perceive LLP as high-risk entity. Therefore, getting a loan under LLP or getting a credit term under LLP is still a challenging one. Furthermore, the degree of tax audit remain the same. Well, none of the above is perfect. If you are new to the market, my advice to you, if you have limited cash, are risk adverse, and unsure whether you will succeed in business, let's try sole proprietor or partnership, depending on how many friends you have. If the business is successful, you can then move to Sdn Bhd. If you are a lawyer or chartered accountants like us, you have no choice but to stick with sole proprietorship or partnerships or even LLP. That depends on the rules and regulations set by your professional body. If you are in the service line, where credit term is never a concern, you do not intend to get any loans, LLP seems to be a cheaper and more feasible option for you. But if you are confident, you know you need funding soon, you have a long-term vision like I do, don't waste time. Just go for Sdn Bhd. Certain money is worth spending for. This is Song Liu signing off.
Sắp sắp sửa